Thank you, Chairman. Thank you, IBC, for this opportunity for me to speak on this important subject. The cotton outlook, for a brief first outlook on the new crop, which is the 2016-17, followed by what to look out for. The first slide, this is basically giving you the world cotton production across the last 12 years. The y-axis has got the volumes in tons, and that's because the bale sizes are different in different parts of the world. And the x-axis has got the years. So as you can see, the crop this year was the lowest in the last 12 years. This is something which came to light gradually across the season, but basically we had a 20% drop in the crop over the previous year, and that happened in US, it happened in India, and it also happened in Pakistan. Pakistan had a 35% lower crop, US had a 10% lower crop, and India, by what we estimate, will be down roughly around anywhere between 15 and 20%. There's still a bit of speculation on the crop size there, but our internal figure is 33.4 million bales of Indian size, that's 170 kgs, and that would be 15% less. So there has been a much lower crop, and that's part of the reason why we are seeing the prices that we are seeing right now. Now this is the second slide, which exactly has the same axis, but it plots the consumption numbers. Now one thing you can see here that we all would like to forget, but 2001, was a landmark year which probably may not be seen again in cotton world. I wish it doesn't happen again. But we saw a sharp drop in consumption, almost 20% drop in cotton consumption because of substitution to man-made fibers. It happened because cotton prices went above $2. I don't want to speak much more about that subject because everybody has not so great memories about it. But cotton consumption thereafter has kind of picked up. It's picked up by roughly about 5%, and it's stable for the last 3 years. It's whilst the world is growing at roughly 2.5 to 3%, but unfortunately the consumption has been static. We will come on to the reasons for that later on in the presentation, so I don't want to talk about it right now. Now the third slide is giving you the stocks. So in terms of the stocks, if you see the stocks, after hitting a low in 2009, that was the reason for the sharp increase, they rose steadily through 2014 to hit 24.4 million tons, exceeding the annual mill use. So basically stocks in 2014 were even higher than use. The blue is the use, the green is the consumption, the red is the stocks. So stocks actually went above even the world use for 1 year in 2014. That's the reason why we saw low prices after that. And now the stocks have come down a shade because of the low crops that I already spoke about. So we are now currently holding almost 90% of usage still in terms of stocks. So we are still in a world that is surplus of cotton, despite the lower crop that we saw. Now who are the main consumers, or rather who are the major importers? Because what impacts prices is world trade. Because the domestic usage within China, the domestic usage within India, within Brazil, that doesn't impact prices as much. What impacts prices is world trade. So coming to the major importers, there's been a shift in that in the last 6 years that we have plotted in the graph here. You can see that China, which is the red bar, used to be a very big importer in 10, 11, 12, 13, but its imports have dropped in the last 2 years, or rather 3 years, and this year we have a new contender for the #1 slot of the biggest market of the world, and ladies and gentlemen, that's Bangladesh. So you guys are sitting in the biggest market of the world right now, and there's another challenger in the form of Vietnam. This is another market which is pretty much almost at the same level as Bangladesh. So Bangladesh, China, Vietnam, pretty much all around that 1 to 1.2 million tons level as regards import. The other major importers are Turkey, Indonesia and Thailand. So these are the top 6 in terms of the import markets of the world. Now a little bit more about Bangladesh. I've been my own story since I started coming to Bangladesh in 1997 is the first time I set foot over here. I have seen cotton consumption at that year was 120,000 tons. There were only a handful of mills. I can remember Square, there was Fakir, there was Chand. Those guys are no more, of course, the last two, but many new mills came. And this is the meteoric rise of the Bangladesh cotton industry, which from that 110,000 tons, which was probably somewhere over here, but it has steadily climbed up to become the biggest importer of the world, now at 1.2 million tons. These numbers, all that I'm talking about in the whole day will be all USD. So basically, we are talking USD numbers here. The red bar gives the stocks. The stocks have been, I mean, earlier they were pretty low level. I mean, Bangladesh is known as a just-in-time buyer, but the last 4 years has been slightly bigger level of stocks. One could attribute that to some traders keeping stocks after what happened in the, now no more about those days, but that could be the reason. It could also be mills keeping a slightly healthier inventory. Moving on, this is Vietnam, where the rise has been even sharper, because you see the graph, it's like a tangent going, like a rocket up to space. This is mainly due to Chinese mills who have migrated to Vietnam. That's on the back of the policies of the China reserves. The China's government policies, as you know, after 2011, they started stocking up and piling up cotton in a very big way. That led to very high prices in the Chinese market. And their own internal prices were 40% higher than the world. They were then 30% higher, they're still 20% higher than the rest of the world. And due to that, the Chinese mills shifted their capacities to Vietnam. They produce the yarn and sometimes even fabric and bring it back to China for conversion into garments that is exported to the US and other parts of the world. So China, another very big story in the textile world, Vietnam. Now your friendly neighborhood, the neighbor who's a big cotton, the biggest cotton producer in the world, the second biggest consumer in the world, and also the second biggest exporter in the world. India's consumption as well as production have been rising. The crop has risen quite steadily, but last 2-3 years it has been on the back of insufficient monsoons. The crop has kind of declined a little bit, but consumption has been more steadily rising. It's a pretty much steady trend of rising consumption. Stocks went up, went down, but this year is sharply down. This is because India has exported a lot more than they did last year, and they're left with much lower level of stocks. Part of the reason why we are seeing the 64 cents on the futures market right now. Another thing about this is about the US market now. For my friends who are here, basically the biggest impact to the futures market, which is now the barometer for world prices, for yarn prices, for everything that happens in cotton, including our lives actually, is the US market, because 80-90% of the moves on the market happen due to domestic US factors. This is because US is where the futures market is. Only US cotton can be delivered against the contract that we are all using for selling and buying non-US cotton, but what can be delivered or taken delivery of is only US cotton. So US is therefore the most important thing, and what happens there actually impacts us much more than what happens in India or China. Is already there for everyone to see. That's part of the reasons why we are at 64 cents right now. This is just a representation of the world stocks, showing you, because one is the world stocks, which I told you in the beginning was 90% of consumption. That's a very high number. But where are the stocks, and are they really impacting the market? The answer would be no, because if you see, the red bar is the stocks that are in Chinese reserves, or China rather. Majority is Chinese reserves, but it's China stocks. China is holding about 60%, more than 60% of the world's stocks. That's the red bars. Followed by India, holding the dark blue, some stocks, and then it's the rest of the world. But basically the rest of the world has been a fairly steady number in the last 4 years. But Chinese stocks have been also quite a steady number, but they have been a little bit down this year. Because of the lower imports, the Chinese mills have kind of reduced their stocks to a small extent. But these are actually not really freely tradable stocks as yet. In the last crop year, they sold hardly 60,000 bales, if I'm not mistaken, from the reserves into the market. And this year, they have been talking about a big amount of stocks sale to be coming, but nothing has come till now. We will come to details of what they're really going to do. So that's what I was talking about, is the free stocks. So basically, if we see, the world stocks have come down from almost above 200% to 167%. But the freely tradable stocks, which is the dotted line, that has come down from about say around 60-70% to 41%. This is another reason why we are seeing the prices in the mid-60s right now, and a bit of a recovery in the prices, because the free stocks is not really that high in the rest of the world. Now this is a kind of a deep dive into China. It's a busy slide. Let me try to unravel it for you. Basically, we would like to draw your attention to the bottom two lines that indicates that through 2001 till 2014, the reserves purchased 16.6 million tons of domestic cotton. So for 3 years, they pretty much brought the whole crop, and they imported an additional 1.7 million tons, but they released only 7.3 million tons, leaving a net addition to the reserve of 10.9 million tons. So basically, what they are holding now is a number which is close to 11 million tons. That's the cotton that they are holding due to the reserve buying program that they did between 2001 to 2014, which is buying 3 crop years and releasing about 1 crop year worth of stocks into the market. Details on what the reserves is going to do. Basically, as you all would have heard, the reserve is now finally showing a greater motivation to offload their huge stocks. They have announced that from the 3rd of May, they're going to start daily auctions of cotton. They're going to be putting up a total of 2 million tons, which will include 300,000 tons of imported high-grade cotton. They are also going to put up 1.7 million tons. The balance 1.7 million tons will be local cotton, which will obviously be 3-year-old crop, because that's what they bought and that's what they have. The whole cotton is going to be regraded and reclassified and sold as per the fresh certificates, because the previous certificates that were issued almost 3 years ago obviously may not be valid, because the cotton quality might have degraded in these years of storage. And they're going to be putting about 30,000 tons for every day basis. The first 1 week is going to see more of the imported cotton trading. And this is going to be the event which everybody needs to watch out for, because the prices at which the cotton trades and the volume that is picked up will determine price trend for the remainder of the 4 or 4.5 months that we have of the balance of this crop year. So this is going to be interesting to watch out for. And there's a formula which has been agreed upon for the sale. That formula is the Kotluk A index converted to CIF China, which means add the VAT of 13% and the import duty of 1%, plus the Chinese index. There is a Chinese index which is published on a daily basis. It's also called the CC index. It's published by Kotluk every day. It's also there in Chinese press everywhere. It will be the average of the two. That is going to be the selling price. Yesterday, the calculation of the average of the two came to a figure of 12,000 RMB per metric ton, which at the moment is around 84 cents per pound, 83 to 84 cents per pound at current exchange rate of 6.5 RMB to a dollar. And if you remove the VAT and the import duty part of 13 and 1% respectively, that would be 73 cents per pound. So pretty much Chinese cotton is going to be available at world price. Convert it to yarn and sell it at current prices. It's better than importing cotton yarn from India at current price of around $2.45 to a kilo for 30 carded. That's the main count that is imported from India. And therefore, there would be indeed a little bit of an upward boost in consumption to the China. Will that impact the rest of the world? That's a very good question. We will have to see. We'll have to see. To some extent, this drop of yarn imports might depress world prices a little bit. But the Chinese authorities mentioned that they might buy some high-grade cotton after releasing that 300,000 tons of the imported high-grade cotton that they have in stock. So basically, some people are understanding that as an intention to import some high-grade cotton, maybe from Australia, maybe from US, and that's part of the reason why there's been a bit of a increase in the world prices. But it's assumption. We'll have to see whether they really do it. Now, earlier we saw that the consumption has really not gone up at all, and barring the catch-up that happened from the 2001 decline because of high prices to the levels of about 5% higher. But last 3 years we're really stuck in terms of consumption. Although the world is growing, there are more people being added to the planet. We are all assuming they're all wearing clothes, and we all are at least. So where's this consumption going? The answer is in this slide. Basically, polyester, that's the enemy number one for cotton. The prices of polyester and cotton have been plotted in this. Basically, the blue line is the cotton K index on Far East basis. The black line is the Chinese cotton prices. Sorry, the black line is the Chinese cotton prices, and the red line is the Chinese polyester prices. Basically, Chinese polyester prices, which is the red line graph, compared to the Chinese cotton price, which is the black line graph, have been half. In this largest consuming market of the world, polyester fiber has been available at half the price of cotton. What do you expect? Obviously, we've lost consumption. And the gap may not be as huge for the rest of the world, but yes, it is sharply lower than cotton, at least 25 to 30, sometimes even 40%, depending on the time and the market. That's the reason why we have seen a shift in consumption patterns towards man-made fibers and mainly polyester. This is a graph showing you the fiber consumption. So basically, this confirms that there are indeed the newer people coming into the planet are wearing clothes, and consumption has gone up for total fibers put together. But cotton is the portion in green. I think we are good for the environment. That's why I've used the green color to plot cotton. But the dangerous, which is the red trend, synthetics have been increasing so rapidly, and they have taken away bulk of the increase. The bulk of the increase that have happened in world fiber consumption has gone to man-made fibers or synthetics. This is a slide giving the world polyester capacity. So these guys, these polyester guys, I mean, apart from whatever share they have taken, they have the potential to take even more share, because the capacity utilization is not full yet. They still got this unused capacity which they can even start using if cotton prices were to go back to, let's say, 80-90 cents, which is what every producer in the world at the moment is very unhappy with the current prices. That's because these prices are at around break even in terms of Indian MSP. They are at lower than cost price for Brazil. They are well below cost for Australia and US, and every producer wants the price to go up. But how can they go up too much? Because this unused capacity and this fiber, which is already 30, 40, 50% cheaper than cotton, this is going to kick in. So we don't expect any very big rally in cotton prices because of this. So anything that the producer has to do would have to be on yield improvement. That's the only answer for the producer to be able to make up for the lower price that they are going to see for the next few years at least. Now, this again is the world polyester utilization. That the previous slide was for China. So even in the rest of the world also there is unused capacity which can be which can come back and further create problems for cotton. Now we'll go into the yarn trade. This is again basically showing you how the yarn trade is. In terms of yarn imports, we have seen Bangladesh increasing their yarn imports by about 50% compared to the 2011 numbers. That's mainly coming from India, as you all know. Most probably it's in the higher counts because 30s are produced in quite a large quantity here already. In terms of the yarn exports, India and Pakistan, they account for the majority of the yarn exports, and the biggest market is China, as everybody knows. Now this is what this is basically showing you the world S&D for the years, that the last 3 years. You can see that the crop which has reduced, the 20% drop, and this year particularly is 16%. The 20% was as compared to 3 years back number. In terms of the world trade, that has also come down because of the lower Chinese imports. The world trade, which was 8.9, has come down to 7.6 already. That's a drop as well. And most importantly, the stocks are down. That's another reason what we have for the current prices that we are seeing. This is our kind of outlook for what the USD, till now the USD has not come out with any estimate for 16-17 yet, and the first estimate will come out around the 10th or 11th of May along with their report. But this is our guesstimate of what USD might come out with. The beginning stocks is a fairly simple figure because we got it from the previous years. But we expect the crop to rebound in the whole world by roughly around 6%. The planting intention reports of the US, which you all must have read, which came out on 31st of March, showed a roughly 10% increase in acreage as far as US is concerned. We expect the yields in India and Pakistan to improve back. Of course, assuming that the monsoon will be normal, which is what the initial forecast from two very reputed weather agencies is. So on the back of these two, as well as similar crop in Australia, Brazil, we are expecting roughly 6% increase in the crop. Not much in terms of use. It's going to be fairly flat. There's still compared to polyester and other fibers, cotton is richly priced. And we don't expect too much of a rebound in consumption yet. And there will be a slight change in the ending stocks, which is like a 6% drop. That's what we expect in terms of the first cut numbers that are going to come out. But of course, these are estimates, it's early estimates at this stage. We will have to monitor the weather. That's the main thing, because that's what's going to impact the cotton. So this slide tells you what you need to look out for, because we frankly don't have a very clear answer to tell you that this is what the price is going to be. If I knew that, obviously I wouldn't be here. So first thing is government policies. The China Reserve destocking and restocking. So are they going to be able to sell this 2 million tons, which they have declared open for sale starting 3rd May? And are they going to buy another? If I were the Chinese government, I would buy 100,000 tons of US cotton, because that would lead to a 5 or 10 cents increase in prices and help me offload the cotton at a better price. But we don't know what they will do. We'll have to see that. And India's minimum support price, is there going to be any major change? I doubt that. I think we have Manish here who knows more about India. So if you have any questions, this is going to be directed at you, Manish. So my personal expectations are the MSP will be unchanged, because there's no need to increase the prices anymore. There's no election coming anywhere right now. But will the monsoon really be normal, and will the crop bounce back to the earlier 38 million bales, or is it going to be in this 34 million bales that we are likely to expect this year? The Turkey's anti-dumping case, as you are all aware, there was a anti-dumping duty applied by Turkey of 3% on US imports. That's likely going to affect US sales, and as I told earlier, US sales reducing is a bearish influence on prices, because if US stocks increase, that's the cotton that is going to come to the ICE futures board, as a delivery. So that's, but is 3% such a big number that the Turkish importers will stop buying US cotton? I don't think so, because there isn't any other contamination-free cotton available to them at the price that US is. Australian is there, but Australian freights to Turkey don't work out, and it's too high a grade for them, and they're not used to those kind of prices. They would rather pay the 3% duty and take US cotton, is what my opinion is. But I'm sure there might be other opinions to that. Another thing is macro. What's going to happen in the world? The world economic growth. The International Monetary Fund is indicating 3% growth in 2015, followed by 3.4% in 16 and 3.6% in 17. We always find that the numbers are a bit rosier as you talk about distant future, because obviously that's very easy to say at this stage because it's far away. But really what we are seeing at the moment is not a very healthy situation. There's worry on Chinese front, because there's people talking about Chinese banks holding a huge amount of non-performing assets on their books, and at some stage or other they may have to declare them non-performing, in which case there could be some worries from China. There's been worries about a hard landing in China for years, but the government has somehow managed to defer that. I mean, it's like something which is being pushed away, but ultimately will come back to haunt the world at some stage. And basically the macro is not very hot at this moment, other than US, which is going through a good growth. And Europe, the Brexit, how is that going to impact Europe? Whether Europe is going to slow down, and if it does, that's another thing to watch out for. How's the North Hemisphere crop going to come out? I mean, we have to monitor the crop in US, India and Pakistan, the three major countries in the North Hemisphere crop. Initial estimates from my chats with people in India and Pakistan seem to indicate unchanged planting in India. I think Manish would agree with that. And in terms of Pakistan, people are talking about 5% lower planting. I don't know why. But they are talking about lower planting, and more importantly, the Pakistani mills are giving inquiries for buying forward. That's making me a bit worried. So they probably know what we don't know, but they are planting right now. So in a month's time, you will know the planting numbers for Pakistan. We may have to wait 2 or 3 months to know that for India. US has already declared an intention to plant 10% higher. We'll have to see how that goes. And then we'll have to monitor the weather patterns, obviously, that's important thing. Will the Australian water situation improve for the 17 crop? In 15 and 16, the crop has stagnated now at 2.5 million bales, but everybody remembers the 5 million bales that we had in 2013. So is it really going to come back? Well, Olam is hoping for that. We have 10 gins that are waiting for the cotton, but if it doesn't come, then you won't find me in a happy mood, let's say. What are the competing crop dynamics going to be for the next season? We have competitors in terms of soybean and corn in Brazil and the US, which are the main places where we see switch. We don't see a switch much in CIS or West Africa. They don't have much of options in those places. And even in India, we do occasionally see the groundnut switch in Gujarat and the soybean switch in Maharashtra, but that's not too much. The main changes we have seen in the past have been in Brazil and US. And Brazil obviously monitors soybean and corn very closely, and as also in the US. And they would plant, for this year the decision is done, but for the next season they would have to see how those other crops progress. And I must say that the food crops are a better story than cotton at the moment. I mean, there's the world population which is increasing. Like in fibers, they can use man-made fibers, but for food there isn't any man-made food yet. I mean, it's all naturally grown food, fortunately, which is why my company also is kind of declared food as the biggest priority. You know, we have got what we call as prioritized businesses. So the food is up there. You know, it's top in the priority, because we don't see too much of a drop in prices on food. And good prices are in general good for a supply chain player like us. And now we are into plantation and downstream production as well, in coffee, in cocoa, in palm, in rubber, in several commodities. So we are betting on this food story. So the prices of the food products are expected to be better, and if that happens, there might be a reduction in cotton planting in the years to come, and that would lead to higher prices, obviously. There's no talk about ethanol now because of the low oil prices, but whether the oil prices will bounce back and therefore once again create a demand for ethanol, and therefore lower demand for cotton production increases and possibly higher prices, but we'll have to watch oil basically. The cotton prices are stable. They've been trading in a range of 8 to 10 cents, and that much of volatility I guess all of us can take. And what would make it more volatile? The macro headwinds, obviously. There's a bit of interest now developing among banks on commodities, because commodities have been beaten down so badly, and the kind of rally we've seen in gold and oil in the earlier part of this year, Q1, has banks excitedly considering commodities now, and even metals have gone up in China in a very big way. As you all know, Chinese cotton futures have also gone up by 25%. So there's a interest back among the banks and speculative money into commodities again. That could lead to some rallies on the cotton side. So we'll have to watch out for that. Polyester demand, supplies, and crude oil prices. Of course, that's the enemy number one, as I said. So we have to watch out what's happening for polyester. I'm told that on the back of the cotton increase, the polyester guys have also increased their prices a little bit, because they are pretty much pricing according to cotton. I find that when I see the graphs all the time. That's all from me at this moment. I'd just like to end by saying that personally, this is not the house view, but personally I expect cotton prices to be in the 60 to 65 range for the remaining 4 months of this crop year. And I would, if I was a spinner, and there are only 2 in this room now,